Welcome to the Transparent FX Academy. I'm Nick and I'm a top author trading view with over 190k reputation points. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, which is what the big players in the market are doing and how they're moving and shifting their orders, which you see right here. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing quite strong historical monthly demand and support. In fact, from here, what we know is that all these previous rejections to the downside were created. Every time the market tested this zone, it rejected it to the downside quite aggressively. And what we know is that previous resistance, once it is broken to the upside, usually gets retested as previous monthly, in this case, resistance turns support and then rejected to the upside. So at the moment, from a monthly standpoint, what we are seeing here is a retest of previous monthly resistance turns support, with the possibility of this level now being respected as support and the market rejecting it to the upside, possibly fueled by institutional longing. And we will be speaking about institutional longing in just a few moments when we move to the commitment of traders analysis. But for now, let's keep all of this in mind and drop down on the weekly time frame. Now, from a weekly perspective, the situation is also quite clear. We can notice a massive impulse to the upside followed by this correction. Now, in general, this comes as the continuation of an uptrend which had a clear inversion, because if we follow the movement here of the market and the development of this trend, we can notice how we went from a strong downtrend, so the creation of weekly, in this case, lower lows and lower highs, to then having this double bottom created at this level, and now we're seeing an uptrend with the creation of higher highs and higher lows. So essentially, we had a perfect inversion of trend from a weekly bearish market, so a bearish trend, to now a weekly bullish trend and bullish market, with the inversion pattern in this case being exactly this double bottom. We can also notice that we just got a strong impulse to the upside, as we were saying, followed by this correction. And after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. And if we do that, we can see how at the moment the market is around the 50% retracement. Now the 50% in this case is also lining up perfectly with this previous level of supply and resistance. From here, all this previous bear market was developed, the one that we just spoke about. Now the market broke above that zone and is retesting the level as support. A previous level of supply and resistance, once it is broken to the upside, is supposed to be acting now as demand and support. And since we also have the 50% inside of this level, we actually have a confluence of demand and support inside of this zone. And inside of a confluence of demand and support zone, there is an increased probability of seeing institutional longing, which at that point could further increase the probabilities of a potential rejection to the upside away from this level. Dropping down on the daily time frame, what do we see? Now, on the daily, before we go deeper into the technicals, I first want to move to the commitment of traders analysis. Now, if we're looking at the data for the euro, the first thing that we have to keep in mind is that if we're looking at the institutional positioning for the euro, we are already looking at EURUSD, because all currencies on the spot are traded against the USD. So if we look at the euro, it is already EURUSD. And what we can notice is that with the last reports, we have risen from 15.8k all the way up to 84.7k. So essentially, we had a huge increase of net positions, with institutions moving aggressively back to the bullish side for the euro, therefore to the bullish side of EURUSD, with longs going from 180k to 209k, and shorts getting decreased from the basically situation in which here we had around 230k shorts at the top. Now we are at 124K, so essentially shorts getting cut in half and longs now getting aggressively built up. We went here from 152K to now 209K. So essentially we are quite quickly going from a situation where we're starting to see double the longs and half the shorts on EURUSD. We also see that the net positions at 84K is one of the highest levels if we look at the past. So clearly institutions are aggressively positioning to the bullish side of EURUSD. And this comes as no surprise because the market, as we have seen, it is at an important monthly historical level, as we have seen at the beginning of the video. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in the description so you never miss new updates. Now back to the analysis. So at the moment here on the daily, the market is testing previous daily resistance now turned support. We have confluence of demand and support all inside of this zone, as we have already seen on the monthly and weekly time frames. So there is the possibility of seeing more institutional longing inside of this zone, which at that point could further increase the probabilities of a potential rejection to the upside away from a level. So if we will see more institutional buying inside of this zone, what would I expect? Well, as my students know very well, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of the market, the best time frames for that are the intraday time frames, so 4 hour and lower. So if the market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level. That definitely wouldn't surprise me. Now, if you want to learn more, I really recommend that you go and check out my website, which is linked in the description, because what you see me share here on YouTube is actually just the tip of the iceberg. In fact, if you head over to the website in the description, you will have the possibility to join the best trading program on the planet. You will gain access to all the courses ranging from the very basics of charting all the way to the more advanced topics like building automated trading strategies using the MQL4 programming language, building portfolios of strategies using quantitative finance tools like the Quant Analyzer, and much more. You will have the possibility, in fact, to gain access to the trading station software with the Telegram notifications integration, one-on-one private mentoring directly with me, the COT data software, which often you see me use directly in my YouTube videos, on all my platforms actually. And if you scroll down, you will see that you also have the possibility to get the integration. So all my EAs, which you find here presented one by one directly on the website. And you also have the possibility to gain access to my live trading show. So I live stream of all the trades on my live account as they're opened, closed, trade, and obviously managed. And if you continue to scroll down, you will see that you have the possibility to join just after here the testimonials and gain automatically access with the email and password that you will create during the checkout process. So I really suggest that at least you go and check it out. The link is in the description and I will see you in it. If you enjoyed the video, make sure to click on the like button. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Also, any questions you have, leave them in the comments below. Subscribe to the channel so you never miss new updates, and I will see you in my next video.